In my previous videos, I talked about how to select a mutual fund, which category to select, whether you should invest in SIP, whether you should invest in lump sum. But the critical question is, how long would you invest? Because if you ask anyone, they'll say simply invest for the long term. But long term is a definition that needs to be clearly understood. Now, if you go to your financial advisor, or if you go to fund manager, or if you watch any interview given by any fund manager or any CEO of a mutual fund, they'll say you stay invested for long term. Nobody will tell you what long term is. You have to define what is long term. There is a general misconception that in the long term the returns will be phenomenal. Yes, they will be, because every year after year after year for 20-25 years, simply inflation keeps on adding up certain value. Now that is a value. Once you remove the inflation part of it, you will find that you have not made any big returns. Okay, there are funds which would have given you, let's say, 3 times the return over 10-year period, let's say over 5-year period, over 6-year period. Cancel out the inflation and you will know what is the kind of return. So everything that is long term is not something someone else should decide for you. You should decide for yourself what is long term. Now once you decide your term and your long term, you will be able to manage your funds properly in a much better manner than simply going by somebody's advice. I'll give you 2 examples here. Today the Nifty or the Sensex is at its peak almost. I'll go with Sensex, many people follow Sensex. Nifty is also around its peak level. Say maybe at 40,000 level today. If you buy something, you're buying at a peak. When you're buying at a peak, it will take several years for you to get that kind of return. It's like saying that I have climbed a hill which is 5,000 feet high. Will I be able to climb up further is the question. Now if you ask this question, you will understand that the long-term definition gets completely out of sync with what you really need. So the long term could be anything. One part which I explained in my earlier video is that it could be 5 years, it could be 10 years, it could be 15 years, or it could be 20 years. Now if you have just joined work and you have started investing, you could look at 20 years. You can set it aside, let's say, a certain amount and say that I will forget it for 20 years. Now for those kind of investors, there are different categories of funds which I will come in my explain in my next video, not in this video. But in this video I would like to emphasize that you should define your long term. Once you define your long term, accordingly you need to monitor your investments. So it's possible that now it's not just enough to define long term, you should also define the target. For example, you said that, let's say that in 10 years you wanted to accumulate 10 lakhs, and in your investments, if that 10 lakhs has been achieved in the 7th year itself, that is when you need to take a decision and decide what you need to do. That is where you have to be very, very clear. Your target has been achieved. Take that target, use that target. So the long term from 10 year becomes 7 year. In the 7th year itself you would have achieved. So therefore your long term there very clearly tells you that your target has been achieved. It could be whatever amount you have set, come out of it, use that for the purpose that you have set aside the money for, and very clearly you will not be disappointed if you adopt that approach. So the approach here is define your long term, define your targets, don't be too greedy. Once these 3 things are done, then you will know that the long term that a financial advisor or a mutual fund advisor is going to tell you is completely different from your long term. So any financial advisor, any mutual fund will always ask you to stay invested. It's not required to stay invested forever. You need to reap the benefits of your investments at some point in time. At which point you reap the benefit is a call that you need to take at your level, and then once you do that, you will not be disappointed, you will not face shocks. The example why I gave you about 7 years instead of 10 years, in the 7th year if you have achieved that target, it's possible that you will say, look, I have achieved the target, what if this will go up further? You will hold on to it. In the 8th year there might be a shock. You would have lost 10 or 15% of what you have already earned. So you need to define your target, don't let greed overtake your target. Once you let greed overtake your target, your long-term plan completely goes out of sync and you will be facing shocks. So define these two things, you will be able to create wealth in a steady and stable manner. Thanks for watching.